My slides are pretty content heavy, but they are fortunately the kind you can read because I want to leave time for questions. A couple of things that have happened since this whole Wayfair decision, and it's changed the way businesses are being sold. It's changed the way transactions happen. Okay, so I have given you some content-heavy things on your table. First of all, bulk sales. Any of you, buy or sell companies in the last 40 years, 50 years? Everybody waived the bulk sales laws, okay? It was pretty standard. The buyer and the seller said, we'll take that risk, we'll indemnify you. Not anymore. Because of Wayfair, especially in the e-commerce world, we are seeing buyers refuse to waive bulk sale. And I'll tell you what, when I represent a buyer, I'm not waiving bulk sales anymore. And when I represent a seller, I politely put in the waiver. And hopefully, buyer's attorney doesn't really understand this stuff. Sometimes I'm lucky, sometimes I'm not. Sometimes we get into big fights over the topic. So here are the problems. If you don't waive bulk sales and they say we want you to comply, in states in which you've never registered, you can't get a clearance certificate. Okay, in the old days it was easy. You had 1 store, 5 stores, 100 stores, all in one state. It was one state, you were registered. Well, now you're doing business in 50 states. You might be a business based in Hong Kong or the UK or here in Missouri. It doesn't matter, but I can't get you a clearance certificate in a state you're not registered in. There's just nothing I can do about it, so it makes for a messy deal. My most recent sale that we closed a couple weeks ago happened to be a New Jersey company, and he was registered in New Jersey. The buyer insisted on complying with the bulk sales laws. We said, fine, we complied. 10 days later, we got a notice from the state of New Jersey. Please withhold $448,500 as the buyer from the purchase price as, this is going to be unbelievable to you, capital gains tax we believe the seller will owe upon the sale of this business. Capital gains tax. I mean, you normally report that stuff at the end of the year on your tax return.
Right.
My seller is planning on investing his money in a opportunity zone. He doesn't intend to pay any sales tax, any capital gain tax, because he intends it to be a rollover. Okay. We are in the process of working with the state of New Jersey to respond to their questionnaire. Their questionnaire provided an exception for like-kind exchange, 1031 exchange. It did not provide an exception for opportunity zone reinvestment. Okay? I am sitting in our trust fund on almost $500,000 because the buyer didn't have a lawyer, didn't know what to do, and I said, well, we were the escrow agent, and I said, as the escrow agent, we'll hold it for you, and as part of our deal, we'll hold it and deal with this. But that's a very real issue that came out of complying with bulk sales laws. Okay? We talked about selling stock. Talked a little bit about how do you structure it, what do you do? What we're seeing on stock deals is an escrow. So when I represented a buyer of these UK companies, we insisted on a sales tax analysis. We hire someone like Robert to do a calculation of what the potential sales tax burden would be, generally going back to 2015 in California and prospectively in the states that have been clear about what they're doing. We figure out what that number is. That number is then put into an escrow, held. The question is for how long? We've been saying at least 3 years. And of course, we have the problem of even at 3 years, if they never filed, potentially, it could be forever. But we agreed at 3 years. We agreed that, the buyer would put a strategy together on what they are going to do about paying sales tax going forward. And this fund, the seller's proceeds are now sitting in our trust account for 3 years. again, for one of those cases, it's over $500,000. I mean, think about this. This is money that was never collected, so this is hitting your purchase price. It is actually a ding, so you sell your company for $10 million, for $20 million. This is a $500,000, $1 million sitting in a lawyer's trust fund. The Florida bar thanks everybody because they're the ones that get the interest. But that's what's happening with the money. It's crazy. Assets. You're definitely going to have an indemnification. There is nobody who's going to take on your sales tax, income tax, or other tax liabilities arising prior to closing. If you don't disclose those issues, they're going to come back after you for fraud if it comes and hits the buyer. Okay? But at least if you disclose it, then we will say, okay, it's not fraud. You just owe the money. Okay. So on your desk, and I will thank Lexis. I have the software that lets me do 50-state surveys. Here you go. These are the bulk sales laws. You will see some states have none. Some states put the burden on the seller. Some states put the burden on the buyer. So if you are a buyer of a company that has potentially sales tax, income tax, other kinds of tax liabilities, you might have an obligation to notify the state before you do the deal. In New Jersey, you got to notify them 10 days before you do the transaction. All right, so in our practice group, and Kevin, who's sitting out in the audience, is a member of my practice group, this is becoming like a hotter topic than other kinds of, normally you're worried about, are the books and records correct? Now we're worried about how we're going to deal with sales tax. Okay, then to complicate it, we now have marketplace facilitators. So what's a marketplace facilitator? I gave you a little chart. I actually updated it. We have a chart that's in the slides. I'm not going to go through it. I'm going to tell you to do the one that's on your desk, because I think this is the current one I sent you the other day. Mm-hmm. Okay? 34 states now have marketplace facilitator laws. So what does that mean? It's a person that contracts with marketplace facilitators to facilitate for consideration the sale of a marketplace seller's product through physical or electronic marketplaces, such as Amazon. Okay? A marketplace seller is a seller that is not related to the marketplace facilitator or any physical or electronic marketplace operated. You could be both. Okay? You could be both. So you could be selling through a marketplace facilitator, and you could also be selling on your own website. If you trigger under the marketplace facilitator structure, like Amazon, Walmart, eBay, you're selling on those sites and you trigger, or you don't quite trigger, but then you have sites maybe direct to your own website, you add those together. This is massively confusing for smaller businesses, because as you might imagine, you now need a way to figure out when you've triggered in the marketplace, when you now trigger in your own seller system. You have to be able to add those things together. California actually has a booklet on this, on how to comply. Some of the other states do as well, but California says, I don't know what, 50, 60 pages of how you do this. Needless to say, this is a huge burden on interstate commerce. If our Congress doesn't act, this is kind of a nightmare for small business.
Not as simple as the court said it would be, is it?
No.
Yeah, not really. So what does the legislation say? Shift the sales tax collection and remittance obligations to the marketplace facilitator. They shifted it to Amazon, to Wayfair, okay? They're now responsible for calculating, collecting, remitting, and refunding sales tax. So if a product is returned, the sales tax has to be refunded as well, okay? In certain states, local taxes aren't included, meaning there's 9,600 taxing jurisdictions in the United States. There are only 50 states. So my math says 9,550 jurisdictions, some of which are and are not included in that. I don't even know what to tell you on that. So full disclosure, I'm married to a tax lawyer, You know, so these guys, you know, what they do, I get it, I understand it, I appreciate it. For those of us that are like corporate lawyers that do a lot of business transactional stuff, this is just like, you know, it's mind-blowing. It's like, what the heck am I going to do? How do I advise people when all they want to do is be in business and be successful? So that's the chart I'm not going to go over because that's October 11th, and since October 11th, it's changed.
Yeah.
That's why you have one on your desk. And by the way, the one on your desk might be wrong already. I printed it 2 days ago. It's going that fast.
What'd I tell you?
Okay, more than half, as we've said, so now it's 34. Amazon handles collections only for Amazon. The states will require the seller. We went through most of this. Okay, I gave you an addendum. I told you about California. So, you know, the one thing, and I'll hand this back to Robert, but the one thing I really want to leave you with as you think about this is, as business people, somehow we have to figure out how it is we're going to keep being in business. You know, and we commented about talking to your congressman. Really, you need to, because if we as a country don't figure out how to create a single system for this, we live in a global economy. My clients are literally all over the world. We live in a global economy, and we're either going to be competitive in the global economy or we're not. And as a country, if we don't do something about this, and if we don't get our congressmen, our senators, our judges to start to understand the burden they're putting on interstate commerce, what we're going to find is what I'm going to call untouchables. You know, people from other countries selling into the United States because they think, catch me if you can. And the truth is, it's going to be hard to catch those guys, but they're going to be the competitive sellers. So we do have to come up with something. We really do need to address this, because the burden on all of you as sellers is huge to comply with this thing.